Hi everybody, welcome to the Steckline Report. Cattle on feed report out just a few days ago. Cattle and calves on feed in this country in the major feeding states up 3%. Not a surprise to a lot of people. In fact, the entire report was not much of a surprise, to be honest about it. But the inventory included about 1% more steers and about 2% more heifers. And that's kind of interesting. Placements in feedlots during the December month totaled about 6% less than last year at this time. And it looks like marketings of fed cattle during December were 2% below 2010. Well, we've had less numbers, so we naturally ought to be down on numbers of selling. Other disappearance fell 91,000 head, or 40% above 2010. Don't know where that figure's coming from, but it's kind of an interesting good figure, quite honestly, if you're looking at the cattle market. I don't think there's anything in this report that would scare anybody. I think it's pretty much of a neutral situation for me as I look at it. And again, pretty much stresses the point, friends and neighbors, that this old cattle market, the beef market, in good hands for the rest of this year and maybe even for the next year as well. As I have stated in our past reports, the only concern I have is how high can it go before it runs the consumers away from the buying habits of beef. I can assure you some buyers will never go away from it. It's just too great a product. But when you get down to those folks who are out of a job or those who are working on a very minimum budget, you can kind of understand why they'd leave $15 a pound beef and go to some place and pick up $2 to $4 a pound pork or chicken. In any event, that's probably the biggest question that remains. If the economy picks up and it continues to grow some, as it might indicate to us a little at this hour, at least the stock market does, we might think that this thing could be okay economically speaking in the United States. A slow turnaround will mean buying habits won't change much for things like higher priced beef. And boy, I got to tell you, when it really gets down to it, people will miss it if they stay away from it very long. So I still say we've got beef in good hands for good prices, and quite honestly, still a bargain in the grocery store if you really want to take a look at it. MF Global, we'll just want to make a few comments about that. One of the things that came out just recently, MF Global commodity customers, those of you who are still holding the bag, must be paid before all other claims, including the bankrupt parent company, and that's according to the Commodity Futures Trading Commission, which really should be in charge. Court papers by the trustee of MF Globals contain errors and misstatements of law in arguing the commodity laws, which require that customers be made whole first, doesn't apply to brokerage liquidations. The senseless result would be to render inapplicable the key regulations of the Commodity Futures Trading Commission, they say, and those people who are holding the bag out there, like you traders and you cattlemen, you will be should be paid first. In fact, J.P. Morgan now, who was the lender to MF Global, has given some verbal assurance that a transfer of segregated customer money to pay an overdraft follow the rules governing treatment of customers' money, according to people familiar with the transaction. That assurance was given by Edith O'Brien, or someone in her office at MF Global. She's been on the hot seat talking a little bit about the fact that Corzine knew about this situation when this was taking place. Quite honestly, we don't know the facts about a lot of things because evidently all these hearings can't get the truth pulled out of some of these people, in our opinion. We'll just have to wait and see how it all turns out, but I don't like the smell of it. That's the way it is on this particular Steckline report. Thanks for being with us.